Hi everyone, happy Monday. It is Monday, August 14th, checking in with everyone with a rate and product update for the upcoming week here, mid-August. Summer is continuing to fly by. So starting off with conforming loan interest rates, 30-year fixed 1 point, 6.825, 20-year 6.625, 15-year 6.25. Moving on to jumbo, 30-year fixed 1 point, 6.75, 20-year 6.125, 15-year 5.875, 10-year arms 6.5%, 5-year arms 6.25%. My topic for the day relates to conforming versus high balance versus jumbo loan amounts. We get a lot of questions about this over time. I think it's a point of confusion, so I'd like to chat about it briefly. So starting off with conforming, these are loan limits set by the federal government of which loans can be delivered to Fannie Mae and Freddie Mac. These are generally automated underwriting loans. They go through the process a little bit quicker. The guidelines are a bit more lax. They go up to a debt to income ratio of about 50%. And the government sets these loan limits annually based on the cost of houses per your area. So the standard conforming loan limit for a 30-year single family property is $726,000. As you go to 2, 3, and 4 families, you get higher loan limits that you can deliver to Fannie Mae and Freddie Mac for those property types. Now we talk about high balance. High balance is where the federal government designates certain counties throughout the U.S. as being more expensive to buy housing, and therefore you have higher loan limits you can go to in those areas. So most of the counties that surround Boston, Middlesex, Suffolk, Essex, Plymouth, Norfolk, we have a higher loan limit that we can do a Fannie or Freddie loan of $828,000. So what does that mean for you? A little bit more lax underwriting, 50% debt to income ratio, as little as a 5% down payment, up to $828,000 for a single family or condo, and then higher loan limits for 2, 3, and 4 families within that high balance limit. Now, jumbo is anything above the first loan limit, the $726,000. So if we're between $726,000 and $828,000, we can deliver that loan as a jumbo or a high balance loan. But anything above the $726,000 can go the jumbo route. Now, what does that mean? Today, rates were a little bit lower on the jumbo. Underwriting guidelines are stricter. Lower debt to income ratio sometimes. Clients typically need to have reserve funds. That's extra money in a bank account, a retirement account, an IRA, somewhere else to say, if there were a rainy day, I lost my job, I could pay this mortgage for the next 6 or 12 months. So jumbo guidelines are also not automated underwriting. They're handled by an underwriter, which actually reviews the file in a little bit more depth, maybe some more questions, some more qualifications, higher credit score requirements with jumbo. So just to be aware of that, as we go into the jumbo category, we generally need bigger down payments. And as the cost of that home goes higher, so does the down payment requirement. For example, when we start to look at a $3 million home, the client might need, 25 or 30% down, okay, versus, again, an 828 conforming high balance loan, 5% down. So any questions for my team and I? We're around. We're working hard. I know it's a little bit slower right now with inventory, higher rates, and a lot of people I think are traveling, vacationing, etc. But we are around. We'd love to drum up some business over the next 2 to 3 weeks before we hit return to school, Labor Day, and sort of the informal end of summer. So if you have any questions for my team and I, please don't hesitate to reach out anytime. It's themarqueeteam.com, and we look forward to working with you all. Thanks so much. Have a great week. Bye-bye.